Nerve-stopping crash came out of nowhere, the car flipping over nearly a dozen times. Police now examining this video to determine why the driver completely lost control.
Hi everyone, Brian Eade here, President of Michigan Insurance and Financial, here with...
And I'm Mick McNeil, Vice President of the agency. First and foremost, we just wanted to make sure that you and your families are safe and healthy given the current climate.
And we wanted to take a few minutes to share with you some videos that we shot with Rick Houghton. He is an attorney with Michigan Auto Law. Wanted to bring in an expert in this field other than us insurance guys. So take a few minutes, watch, and it covers some important topics that are all changing come July 2nd, 2020.
Yep. Special thanks to Rick. We really appreciate his help on this. And we just wanted to say that we really appreciate your business and the support over the years, and can't say thank you enough for that.
And feel free to share these videos with friends and family, as there's just not that much information out there. So we wanted to spend some extra time and really focus on what's changing so you can make better decisions to protect your family. Thanks again for your business. How you doing, everyone? I'm Brian Eade, CEO and President of Michigan Insurance and Financial, here in Grand Rapids with Rick Houghton, personal injury attorney. Rick?
Hi, Brian. Nice to be with you.
Thanks for coming in.
I work for Michigan Auto Law. We exclusively practice in auto crash cases. I appreciate you having me, Brian.
Hey, so thanks for coming. Big changes coming July 2nd. PIP options. This is where the legislation has been talking about discounts. You've seen it on TV. Discounts. It really pertains to this coverage and this coverage only. Now we have choice coming July 2nd. As of today, everyone has unlimited benefits when it comes to an auto accident. Coming July 2nd, you'll be able to change your coverages. So, Rick, tell us a little bit about what's going on.
Well, everyone likes choices. And that's where the legislature really has made everyone feel like this is a good thing. Ultimately, this is potentially a really devastating thing for Michigan. It's going to save some money, and what we have is available to us are several layers of PIP options going forward. And PIP is personal injury protection. And so what that means is, what we're really focused on is the medical side of this. That's where the legislature was really trying to hit home. So what they gave us was the option to have unlimited coverage still, which is what we are mandated to carry now. Then you can drop down to a $500,000 coverage, and that'll cover you for up to $500,000 in medical bills. Then you have a $250,000 option. Then you have what's called the $250,000 opt-out. And what that does, Brian, is the opt-out portion is you're opting out of medical coverage. So you still have coverage for lost wages, replacement services, attendant care, mileage, and those survivor's loss benefits we talked about in another clip. But what you don't have is any coverage for medical. And what you have to do for that is prove that you have health insurance that will cover you for a car crash. And we're going to talk about that more later, I believe.
Yep.
Then you get into the $100,000 coverage level, and then you have what's called the Medicaid.
Well, $50,000. $50,000 limit.
Is there no $100,000 limit?
Nope. That's the attended care.
You're right.
So we'll fix that.
We'll fix that.
Just go into, then you have the $50,000 limit, and I'll cut it.
Okay. And then you have what's called the Medicaid option, which is a $50,000 coverage. And why they did that was so that way the first $50,000 would be covered by no fault, and then Medicaid would kick in after that to pay your medical bills. And then you have the Medicare opt-out, and that's $0 in coverage for medical bills, lost wages, replacement services, attendant care. There are no coverages at all for any of those. And then you have the option to buy a rider, which is a $100,000 attendant care rider, to cover you for those pieces that Medicare doesn't cover you for, which is essentially someone taking care of you when you've been hurt.
Long-term care.
Long-term care, yes.
So both with the $50,000 Medicare and the $50,000 Medicaid option and the zero opt-out Medicare, both of those have to be proven. You just can't choose those. You do have to verify that everyone in the household is on Medicare or everyone in the household is on Medicaid. well, Medicaid for the 50,000 and Medicare opt out.
Yes, with one caveat. You can also show them that anyone who isn't has their own no-fault policy that they're covered under. So if, for example, in the great state of Michigan, grandkids a lot of times will live with their grandparents. And so what you can do then is if your grandkid is old enough to be covered by a no-fault policy, then they can show that they have no fault of their own, and grandma and grandpa can opt out under Medicare, or if they're younger than the Medicare age, Medicaid.
So as long as it's either everyone in the household is on Medicare and then they can opt out, or the other people that don't qualify or not on Medicare have a qualifying auto policy with 250,000 limits.
Correct. Yep. So there is that option, is that if there is somebody who lives there that needs to have coverage and cannot opt out, then they have to have their own coverage.
And that goes for the same thing with the $50,000 Medicaid option.
Yes.
That, if people that don't qualify for Medicaid, as long as they have their own auto policy, you could still buy that $50,000 option. But all these things have to be proven. You just can't buy this coverage without verifying and proving it.
That's correct.
Yep. So tell us a little bit from your professional opinion. My professional opinion is you can't put a value on unlimited. You just can't. Unlimited is a big number versus having a cap of 250,000. A week in the ICU with a closed head injury, you're well past the $250,000. A life flight in a helicopter is $20,000. So quickly, you could blow through that $250,000 limit.
You can. And the essential caveat that we come to here is that everyone lives by the general principle of it's not going to happen to me. And I live by that model as well. And unfortunately, that's true until it does. There's a reason why we have a level 1 trauma center in Grand Rapids and how many level 1 trauma centers in Detroit. It's because it does happen, and it happens to people who do nothing wrong every single day. And I, in my professional opinion, have been telling all my family and friends, you have to stick with your unlimited. If you don't, it's a very, very sad tale that when I used to practice in Minnesota, I've read this story far too many times to my clients. And what happens is, say unfortunately one of your family members has a bad car crash and they need to go to the ICU for a period of time, and they had to be aerometed there. Like you said, that's a $20,000 minimum. It's $5,000 to start the blades. And so from there, it just goes up for every mile they have to go. And so you figure that's $20,000. Now you spend a week in ICU or 2 weeks in ICU. That in and of itself can be anywhere from $20,000 to a couple $100,000. Now let's say you've had to have 1, 2, 5 surgeries. Now every time you have a surgery, you're anywhere from $20,000 to $90,000 a surgery for all the different ancillary charges. This just keeps going, Brian. And so if you've opted out of unlimited, then what happens next is, let's say that you do have a health plan that covers it, or you opted out completely with Medicare. Medicare is my prime example because Medicare is what is called a secondary payer. And what that means is they have a right to recover any dollars that they pay from your settlement. So let's say that you recovered $250,000 and you had $250,000 in medical bills. Medicare, thankfully, is not an awful beast, and they will work with you, but instead of you recovering as much as you could have otherwise, you're only going to be able to split that with Medicare and yourself. And if you have an attorney involved, Medicare, yourself, and your attorney. There's also plans out there for health insurance that are what are called ERISA plans, and that's the Employee Retirement Insurance Security Act. I believe that's what the I is. I might get that. Don't quote me on that. So, but what that is that's a plan that's created by the federal government for employers to insure their employees. And what that means is, let's take the electrical union, for example. And a lot of unions have this same type of plan. Their plan has in it, which everyone gets what's called a summary plan description, and it has a coordination of benefits clause. That coordination of benefits clause will almost universally exclude payment for medical bills from car crashes. Once that's excluded, that doesn't mean they won't pay it. It means that they will recover all the money they pay. Unlike Medicare, there's no obligation that they will then split it with you. They will get a first dollar right of recovery over everybody, including your attorney, who usually has a right to recover their fee for all the work they do. Essentially, you're giving all your money to your health insurance plan unless your attorney is able to negotiate that for you.
So we use the situation, so with the Medicare, Medicaid, and the 250 opt-out, where you're opting out of medical depending on your health insurance solely. If you're in one of these plans, if you do have Medicare, if you do have Medicaid, if you do have an ERISA plan, and you do get into a bad car accident, let's say you get hit by a semi-truck. Usually semi-trucks carry at least $1 million in coverage. So if you have $1 million in medical bills, Medicare will take care of those medical bills for that $1 million in medical bills. You hire Rick Rick sues the truck that hit you, collects the $1 million, but before you get the check, Medicare gets a slice of the action, Medicaid gets a slice of the action, and ERISA could get all the action. They could take that whole check. Rick doesn't get paid, you don't get paid, they get paid. You already pay them for health insurance, and here they are going to yank it back. And I think most people have zero clue what their health insurance is.
It's an unfortunate fact of life, is most people don't know. Most people don't know if they do have an ERISA plan. Most people don't know if they have a fully funded ERISA plan. There's many caveats, and we could go down this rabbit hole for days. And I joke with my clients a lot of times, if you want to come and I'll teach you this, we could move into my office for the next 6 weeks. And that's the way that this stuff works. It's very, very tedious. There's a lot of nuances to it. The one thing, Brian, I do want to say is with the 250 opt-out plan, you do have to prove that there's no auto exclusion in your plan. And so to get that 250 without medical, you have to have an HMO or a PPO and prove that they will pay your medical bills. Otherwise, you don't qualify.
And there is a deductible limit, I believe, of $6,500. So if you have a high deductible plan, you do not qualify for the opt-out. And our thing is opting out with, depending on your health insurance. I know my health insurance it's okay, but I have deductibles every time I sneeze. And if I want to go see a specialist, I got to go see my primary care, pay him $35, get a referral, then I got to go see my specialist, pay him another $35. So, we were talking earlier about chiropractic visits or getting into a physical therapy session where you might have a $20 deductible each time. You're involved in a minor accident. Minor. And here you go, $20, $20, $20, $20 for months at a time. So, the savings that you just saved, the few $100s on your auto plan, is now flushed right down the toilet to just pay a different insurance company more, another deductible. Plus prescriptions, all that stuff where if you had unlimited, you wouldn't be paying any of those bills.
It's true, and those copays and deductibles can add up fast. And, I will say this, I don't think any crash is minor. Even an 11-mile-an-hour crash can cause serious injury, and the National Highway Traffic and Safety Association has videos on that as well. The scary thing about that is like you said, let's say that you're not injured that bad, which I do think happens. Your neck can still snap forward in a low-impact crash, causing a lot of trauma to those muscles, whereby you do need physical therapy. And if you go in and you need 6 weeks of physical therapy, that's almost always 3 times a week. And if you have to pay that copay deductible of $20 a visit, that's $60 a week. All of a sudden, like you said, that's $360 over those 6 weeks. You saved $360.
Right, you just gave it back you just took that savings and shuffled it over.
Right, exactly. And that's assuming that you get rear-ended at 12 miles an hour because someone decided that looking down at that phone that rang at the wrong moment was more important than stopping for the red light.
Absolutely.
What were those savings worth?
Yep. So, like, if a client came to you and said, "Hey, I need some advice," I know what, people are calling us every day asking us, what should I do? And my belief is unlimited. 250. We buy insurance for catastrophic losses. Yeah, we do a great job at fixing the windshield chip, but really, ultimately, it's for the loss you cannot afford to sustain on your own. And that's the true definition of insurance.
Well, Brian, let me ask your customers this. Are each of you a good driver? What about the person that's driving behind you? Do you know if they're a good driver? Do you know if the person who's coming at you at 10 o'clock at night on an icy road in the middle of winter is a good driver on that 2-lane highway? Do you know if the person that's coming up to the stop sign, the 4-way stop, as you're getting ready to pull out, do you know if they're a good driver? You don't know that. Do you know if the person that's coming up behind you has been drinking tonight? You don't know that.
Right.
And
so
those are scary propositions.
And which can result in huge medical bills. And here you are, depending on your employer provided health insurance plan, and it's only as good as they opted to buy. You could have super high deductibles. You could have exclusions. You could have, we're not going to approve this. We're not going to approve that. You got to go here. You got to go here. We're not going to authorize that CAT scan. So those are all the wild cards where with unlimited, you really don't have to dodge those. If you need an MRI, they give you an MRI.
It's true. And ask any Medicare eligible individual if they're happy with how Medicare treats them and the care that they receive. And the answer is 9 out of 10 times, I'd rather be on my private insurance I had before.
Right.
And honestly, doing this every single day, I'd rather be on no fault than on the Medicare.
Yeah, and that's a big statement. So, and I'm a firm believer in that. I've seen these huge claims that come from like Rick said, minor accident. I'm like, how did this claim get to $800,000? It adds up. A couple back surgeries later and a long-term care situation, you're well over that.
We all like to think of anyone who's in a crash as a perfect able-bodied individual. 25 years old, healthy, fit, and unfortunately, we're not. Most of our society has pre-existing conditions that were there before the car crash. Most of our society is susceptible to low-impact injuries, and those can really be a lot more than they seem when you're at the scene of a crash.
Yeah, absolutely. So both here and I, Rick and I, recommending unlimited. It's your choice. You're signing a 6 or 7 page waiver when you do make these choices. And I tell my customers, if a waiver is 7 pages long, it's 7 pages long for a reason. If you weren't opting out of huge coverage changes, it'd be a 3-sentence paragraph.
It's true. And Brian, before we go on to the next subject, it's really important to note too, because a lot of people may not think about this. They may say, well, I've got a deductible, but it's just $3,000 or $2,000, so I'll save that over a couple of years. But the thing you have to ask yourself is, what happens when you elect to drop your PIP down to, let's just say, $250,000, and you get into one of those catastrophic crashes? Heaven forbid that happens to you, but what happens then? And now your medical bills run on for 3, 4, 5, 10, 15, 20 years.
Well, we're talking about, like, with using your health insurance. I ask everyone that has health insurance, how long will your employer pay your health insurance if you can't work? Most people are 30 days. After 30 days, you can buy your plan through Cobra for 18 months, and then you have to go buy your own insurance, which could be in the thousands of dollars a month if you have a family.
It can be.
Yeah.
And even assuming, and let's just assume that you have the most amazing employer in the world, and they do keep it for that 20 years, but you have to continue to pay your deductible every year, and you have the lowest deductible out there, $1,000. You just spent $20,000 over the life of your injury, and that happens. there was a number thrown out, and I can't remember exactly what the number was, for the number of people that were actually in the catastrophic fund when this resolution was passed last year. And I want to say it was 18,000 people were collecting on that still for very serious injuries. And some of those are people who are going to have brain injuries that they never fully recover from that need help.
Yeah.
And that's where you have to think about, what if that's me or what if that's my child? Who am I protecting today?